Hey folks, Dan Frio here, the rate update. Today is November 18th, 2020. What rates do today? Well, the stock market didn't do too well, but let's find out what the rates did. And also, I got a special edition at the end of this. Those out in the big cities like California, I know that's not a city, it's a state, but most of California, Chicago, New York, you're gonna be surprised. You could probably cut your rent $300, $400, $500 a month and still buy a home. I'm going to show you that next. Don't go away. Be right back. Okay, so what happened today? Well, bad news on the stock market. Stocks were down, and I think it's more profit taking and more settling more than anything because there's so much uncertainty. We're uncertain about the president. We're uncertain, and please, no, you don't need feedback. I'm going to be unbiased on this whole thing. I'm starting to get flack on. I said something about President-elect Biden yesterday, and I got a whole bunch of flack. So I'll be unbiased there. I don't want that. I don't want to distract from what we're trying to talk about here and learn here. But we really don't know who the president is yet. Kind of. We don't know when the vaccine's going to be ready. We don't know. We kind of know how effective it's going to be, but will it pass quick enough? We don't know if the kids are going to be going back to school. We don't know if restaurants are going to open. There's so many ifs that I'm surprised the stock market isn't just crashing. But the Federal Reserve has stepped in to do a fantastic job, and then the government is also sitting there right on the brink of another stimulus package. It's going to be great for the short term. It's going to be horrible for the long term because how do you pay that money back? Well, you got to increase taxes. So people getting money now, down the road, we're going to have to pay the piper for that. So let's see what happened today in the mortgage arena. So if you're a realtor, you're a financial planner, you're a buyer, you're looking to buy a house or refinance a house, or you're just kind of into numbers, you came to the right channel. I have a lot of mortgage advisors actually watch my channel because they learn a lot. And one of the biggest things they learn is, what is this? Dan, why do you watch mortgage-backed securities when mortgage rates are tied to the U.S. Treasury? Well, let me give you some bad news. Mortgage rates have nothing to do with the U.S. Treasury. It has everything to do with the mortgage-backed securities market. This is a bond that trades on Wall Street. You might have it in one of your investments. That is the biggest piece of the puzzle when it comes to what your mortgage rate's going to be. Okay? So let's look at this number right here. What this number represents is what is happening or what happened today to the price of this particular bond that trades that determines mortgage rates. Well, let me give you a quick little summary on how bonds work. The lower you pay for a bond, the lower amount of money you pay, which we saw today with a red number. We paid 9 ticks down. The lower we pay, the higher the rate of return or the higher the yield on the bond, the higher your mortgage rate. Okay? If you see this number green, means the price goes up. As prices go up, yields or rates or mortgage rates go down. So we love when this number is green, because it's pushing up the prices, pushing down the yields. Okay, so that's what we see here. So what I try to do is forecast where we're going to be tomorrow, next week, next month. How am I getting that data? I'm not just pulling it out of a crystal ball. I do a lot of things in the background. I do a lot of charting, which I'm going to explain to you right here without boring the heck out of you. I follow a lot of newsletters, economic newsletters. I follow the stock market. I follow employment. I follow the transportation index, the inflation indexes, and all that other stuff, and I'm going to show you a couple pieces of those puzzles that are coming out this week and where those numbers are and where they should be in the consensus vote and so forth. But let's get to the charting. This is that piece, and then I'm going to go to the economic indicators next. Here's what's going on with the mortgage-backed securities market. Okay, today we ended up right here. Let me get my little thing here. We ended up here. So yesterday we were up quite a bit. Today we're down. So basically, if you take the last 2 days, we're even. No harm, no foul. Okay? What the Fed's been trying to do is really stabilize the market, and they've been doing a great job at it. So look how flat this has been. Okay? So they're doing a great job there. Let's go back to where we were back here. Again, low means rates go up. So back in March and April, rates were, we had a huge blip in the radar right here. And that's when basically the pandemic hit. And then from there on, we tested some grounds, and then about right here, the Fed got involved and said, you know what, we're stepping into the market, we're buying up mortgage-backed securities, we're buying other bonds to basically settle the markets. And they've done a fantastic job with that. So here's where we are. So we should be trading right in about this range right here, okay? We're a little above that. Do I see a pullback? Yep, because we should be trading right in this range here, okay? That's it in a nutshell right there. What happened today in the stock market? Well, the stock market was down 344 points. Again, I think it's just basically people settling in, saying, okay, once we have good news on there is a vaccine, you're going to see this rally, because we know now that in 6, 8 months, 12 months, the vaccine will be out there and the economy will be coming back to normal. That's the prediction. So I think there's just some people just a little bit at ease right here. You're going to see probably at the end of the year another drop in the stock market when people start selling off for tax purposes. Okay, so that's basically the stock market. We don't really follow that in detail here, and I won't go over that in detail here, but I follow that. There was a bond auction today that went terrible, and that's why we saw a -9 on our numbers, which normally we get a positive on bond trading day. The rest of the economic indicators came out as such. Housing starts came out this morning, and they blew the doors off. So there are tons of homes being built. Building permits, this is what people are projecting for the next 6 to 12 months. They're putting in permits to start building the homes. Those numbers this is pretty darn close. They're pretty much in line. They were the same as they were last month. They projected a slight increase, but it came in exactly where we were last month. And then the bond auction went terribly. Tomorrow we're going to start getting job numbers, and that's what we're going to have tomorrow. I don't see really anything here that could hiccup the market, so that's that. Let's get to the headline news on a newsletter that I post at the end of each day. On all of my platforms, and yields give up early lead but remain near 2 weeks lows. So mortgage rates they're just saying they're kind of just steady. We'll leave it at that. So what I want to talk about now is, and I prefaced this on yesterday's video, if you're looking to buy a home, let's get to that piece of a puzzle. And a study came out and said 80% of millennials want to buy a house. The tough thing is, between the rent they pay, student loans, car loans, all this other stuff they have, it's tough. But I'm going to show you here in a second. I pulled up some rent data in California to show you the average rent's about $2,300 to $2,700. So I'm like, there's so much misinformation out there. Let me try to walk somebody through. Can you buy a house? Maybe, in those areas, $300,000 would be a good starter home. Where would that payment be in relations to a $2,300, $2,400, $2,500 house payment? So let's break those down. So first of all, I want to explain, when you're buying a house, especially as a first-time home buyer, you only need 3% down. Okay, 3. If somebody's telling you 5, 10, 20, 30, 40, 50, call me. I'm going to give you my information at the end of this. And if you're in the process right now with somebody else, I'd love for you to call me, at least to get a second opinion on a rate, fees, and everything else. So let's get on to what the numbers look like if you're looking to buy a home. Well, I plug in some numbers here, and I put in, I want to buy a $300,000 home. I want to put down 3%. That would give me a loan amount at $291. Looking to purchase the house. My credit score is 740. It's a good credit score. My debt ratio is irrelevant in this situation. I'm just looking for what the rate is. Put in, I'm looking to buy in California. I go down. Hold on one second. It's refreshing. I go down, and I hit submit. What would my rate be, and what am I looking for as a payment? So I want to break down, here are a whole slew of programs that we offer on a 30-year fixed with 3% down. I'm going to go with the Fannie Mae Home Ready program, because that's one of the biggest programs that's used out in the market right now today. So the rate is right now is 2.75. I'm going to go over and explain to you how my rates work. And I post this usually on Tuesdays. I'll post my rates against other rates in the country for different programs. But today I want to educate people on buying their first home. So in this case, here's what your rate would be. And you can see it goes from 2.3 to 4.8. Like, okay, why so many different rates? Exactly. Well, the reason being is the lower the rate you go, you might have to pay points. So it says premium cost, and there are positive numbers here and negative numbers here. These are represented in percentages. These are in dollars. So let's move over to dollars just to explain this. So you could get a 2.375 rate. It would cost you $5,116 in points to get that rate. Would that make sense? Maybe, depends on your situation. In this case, for this client, I would say, you know what, we can do 2.75 on a 30-year fixed, not an adjustable, not a teaser, it's a 30-year fixed rate. You would actually get a rebate check back for $183 to apply toward any closing costs that you might have, okay? That's how this reads. You can get some credits. So let's say, for example, you want, I'll go do 2.99. In that case, you'll get a rebate check back for $3,582. Because when you're buying a house, there's more than just the down payment that you need. You're going to need to pay legal fees. You're going to need to pay transfer stamps and a whole bunch of other fees where this might come in handy of you getting a rebate check to cover all those costs for you. Okay? So now let's break it down. What would my payment be? Well, your payment would be $1,188. But there's more. You're going to have to pay real estate taxes, homeowners insurance, and what we call PMI. If you don't put down 20%, you need what's called PMI. So what is that and how does it work? Well, PMI is basically an insurance for you and us and everybody else because you didn't put 20% down. And it's an insurance policy. I'll leave it at that. And I'll do another video to explain PMI. But how much would that cost you? Well, we have a calculator in here. I'm going to put 10. And it just says I'm a first-time home buyer, so what would my PMI be? So we search around all over the country, and we find the best PMI rates out there, and the company that would be winning is National Mortgage Insurance. Their premium would be $162. So basically this scans the whole country and finds us the lowest PMI company out there. So it'd be $162 would be your PMI, and it'll be on there until your loan to value reaches 78%. Don't let that confuse you. Let's just put down the $162 down because we're going to have to add that to our payment. So we have our mortgage payment, which would be, or our loan payment, which is $1,188, plus we know we need $162 for our PMI. Now there's two other components to this. You need real estate taxes, and in this case I'm going to put $300 a month. So $3,600 for the year. And then you need homeowners insurance in case the house burns, floods, earthquakes, or whatever. And I'm going to say that's about $80 a year. Okay? When you break all those numbers down, your total payment is $1,730 to buy a $300,000 home with 3% down. Okay? So let me just give you, and I try to always post facts because I hate when they call it fake news or clickbait or whatever else. So let me show you data that I'm coming up with to say, okay, how much is rent in California? So the first thing that came up, and I don't know this person from Adam, but I put Southern California rent report for January 2020. And you go down here and says the average rent in LA and San Diego is $2,542. $2,238. So say $2,300 respectively, and it goes up from there. So $2,300 versus we said we can get you into the property for $1,700 or say $1,800. It's $500 cheaper or less you would pay for a home of your own. So is it possible to buy a $300,000 home in those areas? You betcha. And I'd love to help you find a realtor if that's what you need and that's what it takes to get you into a house out there because we do lending in California and all over the country. So that is my report for the day. So I hope you like my video. If you do, please give me a thumbs up. Subscribe down below. Hit the bell so every time I do post a video, you get an alert. But here's what I ask people to do. If you need my help, go to my website. It's therateupdate.com. And I'll show you that in a second. We have an 800 number. I'm going to give you my email address and everything you need to know on how to get a hold of us. But what I ask people to do is if you want to buy a house, get the process started. I'll show you how to do that in a second. If you're already in the process of this and you got a pre-approval, Send me over your pre-approval. Let me see what it reads like. Let me see the rate that they're giving you. Let me see the cost that they're charging you. Get a second opinion. You might save $2, $3, $4, $5, $6, $7, $10,000 in fees, and that's not uncommon. So what I usually do is that you send me that data, I'll write all over it with a red pen, and I'll email it back to you with a short little video of me going over those numbers with you, and then I leave it in your lap. No hard sales. Many times I don't follow up with you because I'm like, I don't want to be the pressure guy. I'd love to help you if we can, but I'm not going to sit there and inundate you and beat you upside the head to get your business. I would love to help, and we're here to help you. So how do you find us? Well, the best thing to do is go to the web, and you're going to go to therateupdate.com. You can email me. So if you have a loan estimate, a fee sheet, you want me to take a look at your mortgage statement to see if I can get you a lower rate, anything of that sort, go to or email me at D for Dan, Frio, so dfrio at preferredrate.com. Or go to therateupdate.com, you can click apply now, home purchase qualifier, refinance rate checker, and get a quote. Or you can call. There's an 800 number right here, 844-775-LOAN. And that's the best way to reach us. So that is it for today. God bless. Thanks for watching. See you tomorrow. Bye-bye.